Certificates of deposit are savings accounts that give you a guaranteed rate of return. In exchange, you lock up your money for a set period of time until the CD matures. If you're looking to level up your CD game, you can try something called a CD ladder, which involves opening multiple CDs that all mature at different times, so that you can have a consistent stream of money being freed up while you earn interest. Today, we're going to talk about 3 strategies for creating a CD ladder that will help you work towards your financial goals. We'll also go over some of the benefits and drawbacks of making a CD ladder. First, let's talk about how you set up a CD ladder to begin with. You start out with a lump sum, and you spread that money out by opening multiple CDs, each set to mature at a different date in the future. For example, you could open CDs for lengths of 1 year, 2 years, 3 years, 4 years, and 5 years, so you'd have one CD mature each year for the next 5 years. The term lengths are staggered, and you can think of each CD as a rung on a ladder. As time goes by and your CDs start to mature, you'll gain access to a steady stream of money that includes a guaranteed rate of return on your original lump sum. As that money becomes available, you can decide whether you want to pull it out of the CD or whether you want to reinvest into a new, usually long-term CD. The traditional CD ladder can result in having up to 5 5-year CDs at one time, basically creating new rungs to the ladder each time a shorter CD matures. When you redeem a CD, you can use it for whatever you want, like putting it away in savings, investing it in the stock market, or spending it on something. Now that we've covered how to set up a CD ladder, we can talk about a few strategies that can help you optimize your CD ladder to work with your financial plans. The first strategy is to create your CD ladder based on the timeline that you want your money to become available. This strategy can apply no matter how long you want to put your money away, whether it's for a few months or for a few years. For example, you can time your CDs to become available for a big planned purchase, like making an offer on a house or buying a new car. Or maybe you want some stable returns on your savings during retirement. You could time your CD ladder to give you money every year or so during retirement, and then you can either spend that money or put it away into a new CD. As your CDs mature, consider reinvesting the money from your short-term CDs into longer-term CDs. You'll get your original money back plus whatever interest you earned during the length of the CD. To keep the ball rolling and to compound your interest, you can open a new CD after your old one matures and earn even more interest. When shopping for a new CD, it could be easiest to just open another CD at the same bank. But don't forget to look at interest rates at other banks as well. It's possible that rates will have changed and new offers will have become available during the time that your money was in the CD, so be sure to compare your options. The second strategy to consider is creating a mini CD ladder. A mini CD ladder is when you open a few shorter-term CDs instead of the traditional CD ladder method of 1 through 5-year CDs. For example, you could do a 3-month CD, a 6-month CD, a 9-month CD, and a 1-year CD. You'll gain access to your original money in quick succession, plus you'll get a little bit of interest along the way, though you may miss out on some of the higher rates of some longer-term CDs. The third strategy is to create an uneven split ladder. This is a bit of an advanced move because it requires you to keep an eye on economic projections. CD interest rates are affected by the Federal Reserve, and when the Fed raises or lowers interest rates, banks usually raise or lower CD rates as well. With an uneven ladder, you look at the projections for interest rates, and if it looks like rates will go up, you can put more of your money into shorter-term CDs so that you can get that interest quickly. If it looks like rates will go down, then a longer-term CD will help you preserve higher interest rates on your cash for a while. You still open multiple CDs of staggered term lengths. An uneven split ladder works best when you continuously add new rungs to your ladder over time. Beyond CD laddering strategies, let's talk about a couple of the overall benefits of setting up a CD ladder. The first benefit is that interest is guaranteed and predictable. Investing in the stock market will typically provide you with higher returns than CDs over time, but in the short term, it's a volatile place to put your money. With a CD, you know exactly how much interest you'll earn and when you'll get it. The second benefit is that you don't have to worry as much about missing out on high rates. With a CD ladder, you're spreading out your money at different interest rates and over different lengths of time. So if rates increase, you'll likely be able to open a new CD in the near future with the money of an old CD that has matured. Even if rates decrease after you started a ladder, you benefited from high rates for some of your CDs. So a CD ladder helps you avoid needing to time your CDs just right. There are also a couple of drawbacks to consider when it comes to CDs and CD ladders. The first is that inflation could decrease the value of your money while it's locked away. Unfortunately, inflation is a reality that affects us all. When inflation is high, it can essentially cancel out the interest earnings of a high-yield CD. The second potential drawback is that you might have to track your maturity dates. If you don't pay attention, you might accidentally let a CD renew. And if that happens and you end up needing to withdraw that money, you'd get hit with a CD penalty, such as several months to a year's worth of interest. Banks give you a short window of time after your CD matures to withdraw your money without being subject to a penalty. Usually that window is about a week to 10 days. You may want to put the maturity dates in your calendar so that you can remember them. Some banks let you set up what happens at maturity ahead of time on the bank's website or mobile app, such as a transfer to a specific external account. CD Ladders can help you receive guaranteed returns on your money, but in order for them to be effective, you have to consider the bigger picture. Are interest rates projected to change in the near future? Do you have any big purchases that you want to save for within the next few years? How long can your money be put away before you need it? All of these questions can help you determine whether and how to create a CD ladder that is timed according to your needs. I'm Chanelle Bessette, and I'm a writer for NerdWallet. Head on over to our site if you want to learn more about CDs and see ratings and reviews of high-yield CDs and other savings accounts. And if you feel like you learned something today, hit like and subscribe.